Hello traders, Gary Wagner here. It is 1:45 in Honolulu, 6:45 in New York on Wednesday, 12th day of February 2025, and this is the evening report for gold and silver. Gold prices retreated for a second consecutive day following yesterday's historic peak as investors digest a higher than expected inflation report as well as Chairman Powell's second day of congressional testimony. Gold only gained a fractional amount as it opened at $2,927 and closed at $2,929. However, it is the low that garners our attention, $2,885.30. What's most impressive is the quickness of today's recovery. We are using a 10-minute intraday Japanese candlestick chart to illustrate that point. Gold was trading in a tight and narrow range up until the drop this morning that began with gold at $2,911 and within a half hour traded to today's low. These large candlesticks following the low illustrate how quickly traders bid gold pricing back up, first to $2,923 and then to the high of the day at $2,936. One of the rarest characteristics of this current rally is that over the last 7 consecutive weeks, we have seen gold advance when we look at the open on Monday to the close on Friday. In fact, when we look at historical data, this is a weekly chart going back to 2016, we cannot find another instance in which we had 7 consecutive green candles in any rally. In fact, since 2009, there is only one other occasion in which gold has risen and formed green candles for 7 consecutive weeks, and that occurred beginning on the week of July 5th, 2011, and culminated a couple of weeks before gold hit the first all-time record high above $1,900 per ounce. While this is not a historical first, gold's momentous move from $2,600 to above $2,900 in the short span of 7 consecutive weeks is an extremely rare occurrence, only seen on a couple of occasions, and each time concluding with gold at a new all-time record high.
Since the start of the year, gold has been the outperformer and silver has been rather lackluster, but I want to show you how in 2025 silver has set itself up to reach prices it hasn't seen in approximately 15 years. If silver is indeed heading for $35, what is it going to do when it gets there? We could easily see silver shoot up to $40 in a very short time period once we break $35. On a day when gold is trading down fractionally, we see silver surging by over a full percent, up currently around 44 cents. If you look at our moving averages, we have tested support at the 20-day exponential and the 100-day simple moving average, and we are above all of our major moving averages. Again, support is right at about the 100-day moving average. We're going to call it 31.65, and resistance right now is currently at $33, and we fully believe that once we see a break above this level right here, we are going to this level right here. That would equate to a $1.75 roughly. Since the start of 2025, there has been 3 distinct price zones that silver has traded in. At the start, we had this double bottom that occurred at right around $29.33. Then, around the middle of January, we broke into this second price range, which stretches from approximately $30.55 to $32.15. The end of January, we broke into this third price zone, which I believe silver is destined to move out into this last zone of resistance at $35. Highlighted in red is our last piece of resistance right here until $41.50.
This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.